Good evening, everyone. Time for another silver update. This is the 1-minute chart of silver provided by netdania.com. You can click on the link below. And you can see that we have a trending down market, starting with the top here, that happened this morning before Bernanke spoke. And then you can see now we're just kind of trending down. So we had an initial sell-off around 8:30 when the economic news comes out, a pre-Bernanke rally, and then a weakening, and then an abrupt sell-off when Bernanke spoke, a big rally, and then we're drifting back down. So as you know, Bernanke announced kind of an extension of Operation Twist, but didn't really announce anything new as far as a QE3 or anything. So that was kind of read by the market as maybe deflationary. Gold, on the other hand, is not weakening as much. You can see that the initial reaction was bearish, and then we actually had a rally that was much higher than where it began, and now we're drifting off. So kind of a confused reaction in the markets, just a chance for the floor traders to run everybody's stops and swing it one way and then the next. You can see on silver, and this is a very frequent occurrence, you can see on silver that we had a move from around, let's say, about 28.6 down to about 27.7. So not quite a dollar. But a dollar move in silver is about 3.5% at the current price. So you can see that's a 3+% move from there to there, and nearly a 3% move from there to there. So that's silver losing 3% and gaining 3% within the course of 3 or 4 hours. Obviously, that doesn't happen in normal markets, and silver is not a normal market. It's a manipulated market. One of the ways they manipulate it, or one of the reasons they manipulate it, is to generate a lot of volatility in it to discourage people from investing in it. If you saw, for example, if you do the math of the Dow, and I think we've got a Dow, say a Dow of just 12,000. So I took 12,000 times 3.5%. So you can imagine if the stock market fell 420 points at 11:30 and then rallied 420 points at 12:30 and then sold off down 420 points by the end of close. That's the type of percentage moves that you're talking about that happens in silver on a daily basis. And of course, if it happened in any other market, there would be outrage, calls for investigation, and that doesn't happen because that's silver. That's their favorite market to manipulate. So it's not surprising that silver took the brunt of the sell-off from the Fed shenanigans. I have said, and a lot of other people have said, that it's becoming clearer and clearer that it's the Federal Reserve that's behind the silver manipulation, especially with the showing of the coin to Bernanke with Ron Paul, and now the open sell-offs that are repeatedly done whenever Bernanke speaks. It's pretty clear to a lot of us that it is the Bernanke Fed that is behind the silver manipulation, just as Ted Butler has come out and alleged now as well. So, but we're still waiting to see if that downside target is going to be penetrated, and if this move is actually going to be a move out of the downside and a breakdown. We're still not quite to support yet, so we're watching that closely, and a break to the downside could mean a test all the way down to this 20 line here, or this 25. Either way would be a fantastic stacking opportunity for people who haven't been able to get as much as they want. Now, over to the question of the night. This is from George Silver. It's called Silver Hoax. He says, Dear Brother John, you have a knack for answering questions clearly. Could you take the time to answer this little scenario? Man goes into a friend's shop and says he's going on a trip and won't be back for 6 months. He asks a friend to look after his precious silver goblet while he's away. The friend puts the goblet in his shop window and takes orders for the goblet. He says the goblet will be ready in 3 months and gives the customer a certificate for his money. The shopkeeper sells 6 paper goblets. The original owners of the paper goblets, for various reasons, sell on their certificates. Eventually, the original owner comes home, reclaims the silver goblet. Now there is no goblet but 6 paper goblets. One day, a holder of the certificate goes to claim his goblet and finds there isn't one. The news spreads, and all 6 certificates become worthless. The certificates only become worthless when someone discovers there is no silver goblet. My question is, if everyone in the silver industry knows there isn't any silver backing their certificates, paper silver, why doesn't the paper silver become worthless? So, good question. And the answer is I will try to modify the scenario a little bit to try to explain what's going on. So, imagine that you have, instead of 1 goblet there in the shop window, you have, say, 10. And your goblets are manufactured at the shop. Problem being that the raw materials of the goblet are kind of trickle in slowly. So you have 10 there for sale, but you have a few hundred who have purchase them, paper. So every once in a while, one comes in and wants to pick up the physical goblet, and of course, then the reaction is going to be, well, are you sure you want to do that? Here's something else you can buy. Well, there's going to be a delay. It may take a month or so, etc. Whatever they can do to delay and keep the fraud from being exposed. So as they have silver or whatever they're making the goblet out of come in the back door, they're slowing down the physical being delivered out the front door, and they're trying to do at least keep some reasonable just-in-time inventory thing going on. So slowly, as they get the raw materials in, they replace those goblets, and they just try to delay as much as they can them going out the front door, because they know ultimately that there are way too many number of people who own these things, and if they all ask for physical delivery at the same time, then the jig is up on the whole game. So that's closer to what's going on in silver, because what's going on in silver, you have to remember that, first of all, the COMEX only trades about 5% of the delivered silver that's actually used. So the COMEX, even to begin with, without mentioning any of the manipulation or anything else, is really just kind of a paper market more than anything else, because the manufacturers that really need silver, they're not getting it off the COMEX. They're getting it directly from the miners primarily. So the COMEX is really just a paper mechanism from the start. Then when you add in all of the funny money and crazy shorting and naked shorts and all the crazy stuff that they do, then it's just that much worse. So the game they're playing, and of course there is some physical, there always is some physical, but they want to discourage as many people from taking delivery of the physical as they possibly can. And so it's a game, and it's a just-in-time delivery inventory sort of game, and the goal is to just keep up barely, and with the amount that's being mined every year, they can always, if they can delay and stall, they can get more in and just keep the game going. Whereas with gold, we know that all the gold that's ever been mined is piled up all around the world, and people still hold on to it, and it's all over the place. There's tons and tons of gold available. But silver is just at the very edge of running out of available inventory, and that's why there are all these crazy games, delivery delays, and discouragement, and all the things like that. So I would consider that to be a better analogy. Now, the story of the day, I'm going to go ahead and read more from the Silver Bomb, because it's really important. I wanted to jump over to the blog real quick first, and I think I took that down, so we'll go over to the blog real quick. Now, first off, I have put on a Bitcoin donation link. A lot of people have asked me for that, and so for those of you who'd like to donate Bitcoins to support the blog, you can donate to that address. If you have Bitcoins, you're familiar with how that works. There's also a link. I appreciate everyone who's donated via PayPal. Now, there's been a recent thread on the forum about the number of ads on the blog. There are a large number of ads on the blog, and the fact that some people have said, well, you're tracking people's cookies and things like that. Actually, we don't have cookies that we set, but some of the advertisers do. Right now, there will not be this many ads on the blog. The reason why there are this many ads right now is because I'm testing to see what people like to click on it and what people are interested in. Primarily, mostly what people have been interested in are the ads at the top, the seeds, the survival stuff, and that's what I thought, that's what I suspected, but I didn't know, so I've thrown up a whole bunch of ads, and the ones that people aren't interested in are going to get taken down. So, but if you'd like to support the advertisers, I really appreciate that, or everyone that's donated so far, I really appreciate that. It's really helpful. It really adds up for even just the smallest donations. Now, let's go to the Silver Bomb, and I'm going to read another excerpt from that. This is pretty good timing because, this is just more encouragement for you to watch for a price to get in and stack some more physical silver. And he says, the entire premise of this book is that the world, particularly the Western world, stands at the edge of the change of an epoch. As it has been pointed out in these pages, much of that change will be repetition of cycles that have been observable throughout human history. It will also include events that have no prior precedent and will never happen again. The decline of the Western Empire, with the concurrent paradigm shift away from the fiat currency-based economy, resembles past historical precedent. It is understandable as a discernibly cyclic phenomenon, the pieces and parts of which can be seen in prior empires and prior ages. The collapse of an experiment with paper currency, followed by the remonetization of precious metal, is also nothing new. The change that is coming, that has never been seen before, will be due to global realization of the new intrinsic value of silver due to the never-before-seen consumption of it as an industrial metal. It is the combined timing of this new rarity of available silver on planet Earth with the unfolding events of the West to East transference of wealth and the unfolding global return to metal as money that have set up the soon-to-be-witnessed triggering of what has been referred to in this book as the silver bomb. The price of silver is low right now. It is about to go up at a rate that can and only will happen once in history. The release of this book or others like it that address the same topic may have an effect in the further acceleration of the paradigm shift towards awareness about the new rarity and therefore the new relative built-in value of silver. That has been a great portion of the drive to deliver this information in the hands of as many as possible and as quickly as possible, even though doing so could actually shorten the time frame of the present window of opportunity to take advantage of the simple, practical recommendations herein. Now is the time. It is the time of all times to go long on precious metals, and particularly to go long on silver. It is time to buy physical precious metal and actually hold it in your possession. It is time to put every resource that can reasonably be used into silver. History tells us there will be price fluctuation, and as we have seen, all markets are currently rigged and subject to wild volatility due to massive manipulation. These manipulated fluctuations are all based on the exertions of a central banking cartel whose goal is to hide the truth and perpetuate the paper dollar fraud as long as possible. The game has changed, however, with the global economic shift to the east, and that Western banker cartel influence will soon end. Pay no attention to price volatility in the interim. The change that is described in these pages as the silver bomb will be unmistakably different from any of the present or even historical price fluctuations. If you buy silver one day and the next day it drops 20%, don't let this shake you, because that 20% loss is measured off of the current illusion of wealth, the US dollar, which again, with all other currencies and assets that are denominated in dollars, is going to crash. It is at that point that those with physical metal, especially silver, in the hand are going to be the new rich of the new era. Don't look back. In other words, buy it with both fists now and don't look back. So that's another excerpt from the Silver Bomb. Excellent book. You can click on this link. You can get the ebook or you can get it on Amazon. So a really neat book. I highly recommend it. And back to the silver chart. We are approaching a possible breakdown of this very, very long trend line. The market seems to be disappointed in the Bernanke decision to not print up a whole bunch of money, which is really irrelevant because the money is already out there. The silver that's available, if we look at that and think about any of the money that's out there going into it, it's pretty clear that even just a tiny, tiny, tiny percentage of the money that they have printed up to bail out the banks or to bail out bankrupt industries or whatever, bail out Europe, if just a tiny fraction of a percent of that money went into physical silver, it would be game over in the silver market. So we really don't need any kind of QE or anything else to cause gold and silver to go way up. Actually just need people to wake up and realize that they're involved in a paper Ponzi scheme that could collapse at any moment, and in fact will collapse fairly soon. And if enough people act, then there doesn't need to be any more QE. There's plenty of money out there to make the prices of the precious metals explode. And we'll talk to you next time.